Good morning again. We'll start with our monthly recommendations. So we have two IT companies this time, Infosys and Sensatech. So Sensatech is a mid-cap company and Infosys, as most of you know, is a large-cap company. So FY 23-24 was a very muted year for IT. This was mainly because the US market was little down, inflation was high and the expectations from the US market was very down. So our IT companies are very dependent on orders from the US companies. So because of this, the revenue growth was very slow. And if you look at Infosys, the hiring data last year was very low. It was almost 70% down from the previous year. But right now we are seeing very positive outlook for the IT company. They are expecting record hiring for the past 5 years. If you're looking, they are expecting record hiring this year. And also, one of the main revenue sources of IT companies come from the banking sector services that they provide. So this quarter, we are already seeing few improvements in that. So we can expect a very good IT sector performance for next year. And next we have NTPC. NTPC is the largest power generation company in India. It's a public sector company. But one of the reasons for recommending this is because their renewable energy subsidiary NTPC Green is expected to have an IPO this month or next. IPO, it's almost 10,000 crore IPO. So this will really, so even if you're buying one NTPC share, you will be eligible for shareholder quota for IPO. And next we have Sharda Cropchem. It is an asset-light company. That means they are not really manufacturing any of their products. Mainly what the company does is they will just file for new registrations of their products. They'll get it approved. They'll outsource their manufacturing to third party. And a very good strength of this company is they have strong distribution channels all over the world. Their exports is very strong. And but coming to the chemical sector, what happened post-COVID was that the Chinese inventory dump was very high. So the supply from the China was very high. So this led to a fall in most of the chemical prices. So because of that, the chemical companies were doing very poorly past 2 years. But this year, the Chinese production was reduced, and we're expecting good price recovery. So there's a very strong chance of profitability in the coming quarters. And finally, we have Wonderla Holiday, formerly known as Vegaland. So they operate amusement parks in Kochi, Hyderabad, Bangalore, and recently they opened a new park in Odisha, Bhubaneswar. And they're also constructing a new park in Chennai, which will be operational by FY 26. So we see very good revenue stream coming even from the new park and the upcoming parks. And one more thing that we have noticed is they have a lot of underutilized land in the existing parks. Kochi and Hyderabad park particularly, there are a lot of underutilized land. So we see good revenue potential from all these places. And coming to September month review, Nifty went down almost 3%. And looking at the stocks we recommended, JM Financials have achieved the target, but rest everything you can hold. Just one particular thing we want to speak about Star Health is, we recommended Star Health last time. Last week almost there was a data breach, and there was reports that almost 3 crore data was hacked from Star Health. So that is one of the main reasons why the stock went down almost 10%, 11%. But this does not change our view on the company. The company is fundamentally very strong, and that's why we are still asking our investors to hold the company. And we have a new fund offer, Kotak MNC fund. Those who are interested, they can contact the mutual fund department. They'll guide. Okay, thank you.
Reliance you didn't mention.
No, Reliance, because the index went down, so Reliance is having very good weightage in the index. There's no need to worry, because especially for Jio, they have most of you would have noticed who are using Jio, they have increased the rates almost 20%. They have increased the rates. All that will definitely reflect in the coming quarters. So you can still hold, no problem with Reliance.